In this video you know about: does Snap Finance build your credit? The answer is no. Snap financing option is not a credit building opportunity. Snap Finance offers lease-to-purchase financing. You can buy items ranging from computers to furniture to tires. Your purchase is considered a lease, but you can take the item home immediately. At the end of the lease term, you will own your item outright. Snap Finance doesn't do credit checks, but you'll need a steady income. Instead of going directly to a lease-to-own retailer, you can apply at the store, even if you have bad credit or no credit at all. You can only use Snap Finance at stores that work with Snap. Snap Finance Merchant helps people get financing for furniture, mattress, tires and rims, jewelry, electronics, device. It takes up to 12 months of payments for finance merchandise. There is also a 100-day payment option that helps you pay for your purchases in less time. Requirements to qualify for funding: be at least 18 or older, have an active checking account, have a stable source of income, have a valid email address or cell phone. Does Snap Finance build your credit? Does Snap Finance build your credit? How does Snap Finance work? Snap Finance takes it easy to apply and receive financing online. Make sure you meet the minimum requirements before proceeding with these 3 steps. Step 1. Apply online. Application is online. Filling out the form takes just a few minutes and you'll be submitting your personal information along with your social security number and driving license number. Snap Finance can approve your application in a matter of minutes. Step 2. Choose a retailer. Once approved, you can choose your store and start looking for items up to $5,000 depending on your approved credit limit. Snap Finance partners with retailers across the country so you can shop locally and use your approval to lease your goods. There is a store locator feature on their site so you can easily find your nearest retail partner option. Step 3. Checkout. Once your application is approved, Snap Finance will send you an email with the amount that has been approved for the lease. You have to show it to your cashier to proceed with the transaction. From your checking account, your payments will be automatically deducted. How much does Snap Finance cost? Snap Finance does not share specific costs for its lease-to-own agreements anywhere on its site. However, they speak volumes about what some customers can expect in terms of interest or fees. A processing fee or early payment will be due on the day you make your transaction. This amount may vary depending on the specifics of your lease agreement, but compare it with the down payment. Snap Finance does not charge interest on lease purchase agreements. However, this does not mean that you will not pay more than the purchase price of your items. There is an additional cost to the purchase price which will be added in your monthly payments as with all lease-to-own companies. So even when the payment isn't called interest, you're still paying more money for your lease purchase agreement. You may want to consider include some other costs and fees. Application fee and processing fee, late fees, missed payment or non-payment charges. Snap Finance doesn't explain what the financing costs are, but many users report paying extremely high costs. Snap Finance looks beyond a borrower's credit history for short-term financing. While their process is easy and flexible, obtaining financing can be a costly decision. Snap financing option is not a credit building opportunity that can help you qualify for a better loan in the future. There are very few purchases you need so badly as to risk the prospect of paying more than twice the actual cost of the item. Does Snap Finance run your credit? Snap Finance does not report to credit bureaus as it does not provide loans directly to consumers. Instead, the company operates under a lease purchase arrangement with multiple stores and retailers. When you apply for Snap Finance, you will provide basic information such as your name, address, social security number or individual taxpayer identification number, ITIN, employment details and 2 references. You may be approved for purchase amounts up to $3,000. But you will not receive the money directly. You will receive a prepaid Discover card, or you will be able to use the virtual Snap Finance card through your smartphone. And, you will only be permitted to lease purchase from Snap Finance approved stores. There are no fees until you make a purchase, except for an initial processing fee of $59 or less. Repayment terms are up to 12 months. If you miss a payment, Snap Finance will not report it to the major credit bureaus, said a customer service representative. Borrowers who struggle to make payments may be placed in a hardship program with a variety of conditions. Further missed payments may prompt the induction of Snap Finance's in-house collections division. In the worst case, Snap Finance will write off the balance and send your information to a third-party collection agency. But its policy is not to report failure to pay to any of the major credit bureaus. Does Snap Finance help your credit? Snap Finance allows up to $3,300 to be approved without all the hassle of traditional credit card lenders. This is great for anyone with bad credit or no credit. The program works like rent-to-own. You are not charged interest immediately, but are charged month after month. The sooner you pay it off, the lower the cost. Also, if you repay it within 100 days, then there is no interest charge or 100 days like cash. Requirements: active checking account, no overdraft charges in the previous month. Earn $1,000 per month. $39 initial payment. Snap does not offer traditional loans. Instead, we offer a consumer lease that allows you to finance goods over a convenient 12 to 18-month payout period. We also offer a 100-day payment option, which is the best terms. Need new tires for your car? Or new furniture for your growing family? Don't let bad credit get in your way. Snap is like your partner, which provides fast and easy lease purchase financing. Refers to Snap's lease purchase financing no credit needed, which considers more than just credit reports to check approvals or denials. In fact, Snap's applications for lease purchase financing are not even reported to TransUnion, Equifax, or Experian. Our proprietary decision-making process allows us to look beyond bad credit, no credit, and bankruptcy to approve more applicants. Does Snap Finance build credit? Snap Finance, a lease-to-own company that provides financing for people with at least full credit or no credit at all. You can get financing for the essentials in your life and from the stores you want. You're not just shopping at lease-to-own retailers. This new financing option opens up many opportunities to get the products you need without incurring credit card debt or taking on bad credit debt, each of which can be very costly. Getting approved for a lease for self-financing with Snap Finance is more accessible than most financing options. You must meet the following requirements. You must be at least 18 years old. You must have a current and valid checking account. You must be able to prove steady income. You must provide an email address or valid cell phone number. Your approval does not depend on your credit score, and if approved, your Snap Finance account will not affect your credit score. Why here? First, Snap doesn't use your credit score to make a loan decision. Even if they pull your credit to verify your identity, they won't use your credit score or credit crunch against you. Second, Snap does not report your account to the credit bureaus. That means it doesn't help or hurt your credit score. Future lenders will not know about your financing, as it will not report on your credit report. Snap Finance doesn't charge interest, but that doesn't mean you don't pay fees. As with any financial arrangement, always look at the total cost of the item. Snap Finance doesn't charge you an interest rate, but if you add up the payments made during the lease term, it will be higher than the cost of the item if you paid cash earlier. The common charges that you will see are application fee, processing fee, and late fee. To decide whether lease-to-own financing is right for you, look at the total cost. Is it worth what you are buying? Most people use this financing option when they need something like a new car tire or to replace a mattress that welcomes it. If this is something you need and you don't have the cash or credit to pay for it up front, a lease of your own accord may be the best option. What credit score do you need for Snap Finance? Your credit can be built by financing through Snap-on Credit. Even if you have poor or non-existent credit, business students and franchisees can participate in the tool supply company's Credit Start program. And, as long as you make payments on time, participation in the program can help build or even rebuild your credit. For more information on Snap-on Credit, see below. The tool supply company offers Snap-on financing that can help you build or rebuild your credit as you purchase equipment and/or grow your franchise. Snap-on's Credit Start program is designed to help people with a poor or non-existent credit history. But keep in mind, Snap-on Credit requires a hard credit inquiry when processing your application and will report your payment activity to the major credit bureaus each month. Is Snap Finance a credit card? Getting a credit card can be difficult if you have bad credit score. But it's not impossible. The challenge is that bad credit can hinder your chances of approval for a new credit card. And you need new credit accounts to improve your credit score. This is a catch-22. Not to worry, we have some insights to help you deal with bad credit challenges. Know your credit score. Before applying for a new credit card, check your credit report to know your score. You can get a free copy of your credit report once per year by visiting annualcreditreport.com. Knowing your score will give you a baseline to start with and an idea of the best credit card for you. You can narrow your search according to your score because many cards give a range of acceptable scores. Consider why you need a credit card. Whether you're trying to build or improve credit, the right card can help you meet that goal. If you are looking for relief from a hardship and have no other solution, a credit card can be a viable option. Pay attention to fees and interest rates as you start looking at different offers. Fees. Some credit cards have an annual fee for the rewards or points they offer. If you want to build or repair credit, avoid cards with annual fees. When you have multiple cards, they can add up and hinder your process of building credit. Rate of interest. When evaluating different credit cards, it's a good idea to look beyond the introductory rate. Many cards have low introductory rates for the first 6 months and then increase to 20% or more, putting you in more debt than you planned. Read the fine print. When applying for a credit card, it is important to do your homework. Reading the fine print tells you when the introductory rate expires, interest rates, balance transfer fees, additional fees and protection sections. Understand the terms before signing anything and make sure you can pay. The goal is to get out of debt, not accumulate too much. Solve credit issues. Before applying for a new credit card, make sure you have removed any negative issues on your credit report. Not only will this help improve your credit score, but it will also increase your chances of approval. If there are a lot of unpaid cards and accounts in the collection, you will have trouble getting another credit card. The delinquent issues on your credit report are divided into two main areas: collections and public records. Collection. If you fail to make payments on your accounts, creditors can send them to debt collectors to recover the amount owed. This creates a degrading mark on your credit report and can affect your score. Be sure to check your report for collection. If you find a collection that you think is flawed, call the debt collector to get more information or have it removed. Errors can happen, so the more closely you monitor your report, the better. Public records. Public records are from government documents and appear on your credit report in the form of bankruptcy, lawsuits, foreclosures, and tax liens. These can affect your credit by 7 to 10 years. In most cases, these do not come as a surprise. But if you check your report and find a problem you didn't know about, call and ask about it as soon as possible. Does Snap Finance affect credit? Even if you don't have any credit, Snap is a great way to finance the things you need. This is not a traditional loan, but a consumer lease that spreads out your loan. We are your no credit needed financing partner. Has your credit score been affected? Have you been denied traditional funding? Or maybe you don't have any. Snap Finance offers financing that allows you to extend your purchases without any credit over 12 months with convenient payments. Zero financing fee. Bad credit or no credit? No problem. Get approved for up to $3,000 with Snap. No credit needed financing is Snap's rent-to-own financing that does not depend on credit. Financing, accessible, Snap looks beyond your credit score. Asterisk, simple, find out if you've been approved in seconds, flexible, 100-day payment option with no hiding. RIM financing from Snap Finance offers easy financing for people with bad credit. Even if you don't have any credit, Snap is a great way to get things financed for you. Final words. Thanks for watching this video about Does Snap Finance Build Your Credit? If you have any questions about Snap Finance, you please comment below in the comment box.